Hey guys, welcome back. So, which is the better investment? Investing in stocks or investing in property? For some people, the stock market is obviously the better choice. For others, property is clearly the better investment. So, which is better? Which would be faster to the $1 million mark? And which one is going to give you the better retirement? Well, that is what we're going to be answering in this video. Now, the reason this topic is so furiously debated is because it's actually quite hard to compare, as there's so many different ways to invest in each. With stocks, it could be individual stocks, dividend stocks, or an index fund. With property, it could be a single family home, an apartment, REITs. You could have a 20% deposit or 50% deposit or a zero down deal, etc., etc., etc. So, to keep things simple, I will be comparing a standard 3-bed buy-to-let property, and for stocks, we'll use a classic S&P 500 index fund. And I have to say, the results really did surprise me. One of them did crush the performance of the other. Can you guess which? As always, if you do find anything useful in the video, be sure to drop a like, as that's always very much appreciated. Okay, so the stock market versus property. Let's do this. Okay, so we're going to be taking them through 6 rounds apiece. The first round is how easy is it for a complete beginner to get started? Second, how much capital appreciation will we get from both? Third is influence. How much can we influence the value of our investment? Number 4, passive income. How much passive income can we generate from each one? Number 5, how much of our time is involved in each of these investments? And number 6, which one is going to give us a better retirement? So, how easy is it for a complete beginner to get started? We've got stocks on the left and property on the right. So, with stocks, we are just doing a classic S&P index fund. And with a lot of the big brokers, you only need about $100 to get started. For property, we are going with a classic 3-bed buy-to-let property. The value of the property is $250,000. We're going to put 20% deposit down, so this will be $50,000 of our own money, plus fees, plus taxes, which means it's going to be in the region of $50,000, and this is versus $100. So we have to say, round 1 goes to stocks. Next up is capital gains. How much are these investments going to be worth in 30 years? So with stocks, to make it an equal comparison, we'll also use $50,000, growing at 10%, as this is the average return of the S&P 500 historically. Over 30 years, this would give you $872,000. And for property, the value was $250,000, growing at 5%, as this is the average growth rate for property. After 30 years, this would be over $1 million. And the reason this one's so high is because it's compounding at the full value, not just the $50,000 of your own money. So due to leverage, we can say round 2 goes to property. Number 3 is influence. How much can we influence our investment to increase its value? Well, for an index fund, there's nothing we can really do to impact its performance. However, with property, we can renovate, so we could put in a nice new kitchen or a new bathroom. We could even build on an extension and add another bedroom onto the house. This means we could then increase the rents. There's also a lot more you can do with tax, so you can fully utilize all the tax incentives that property has. And for these reasons, we have to say round 3 goes to property. Next up is how much passive income can we generate from both. So with our S&P index fund of $50,000, this gives an annual dividend payment of 1.3%, which means each month it would generate $54 in passive income. Our mortgage is $200,000. If we take a loan at 3% interest rate paying over 30 years, this means our mortgage payment is $843. Now we can get $1,200 by renting out the 3 rooms, which means This would give us a passive income of $357. So as you can see, $54 versus $357 means round 4 goes to property. Next up, how much of our own time is involved? Well, with stocks, there really is minimal learning to be done with an index fund. In fact, I could probably teach someone everything they need to know about investing in an index fund in about 1 hour. It really is just a buy and hold strategy. So this means one of the biggest benefits of an index fund is that it gives you back your time. You could then do something very powerful, like maybe build a business alongside, and this would be a very powerful 1-2 strategy. Next up, property. There is a lot more risk when it comes to property. So this means there is a lot more stuff to learn. To really reduce the risk, you'll need to research all the different areas, probably read some books, do some courses. It's very common to have to look at over 100 different properties before you end up buying one. Then if you are going to do renovations, you're going to have to do all the research, you're going to have to hire all the people, you're going to have to oversee the work. Then it comes to management, and remember, you could be finding tenants every single year or every couple of years. Then what about if the tenant damages your property? So there's a lot more to manage. And yes, you do get a lot more tax benefits, but then you've got to learn all about the taxes, implement all the taxes. So when it comes to time, this means round 5 goes to stocks. And round 6, which one is going to give you a better retirement income? So we'll now take a look at both of these and what happens after 30 years. So with stocks, we saw that it grew to $872,000 using the 4% rule, which means we're going to draw down 4% of that each year. This would give us an income of around about $3,000 per month. And with property, the house grew to over $1 million. Now, let's say the rents have also been increasing at 2% a year. This means now the mortgage is completely paid off. We would be getting an income $2,173 per month. So from an income point of view, it's $2,900 versus $2,173. This means round 6 goes to stocks. So here are the results. When it came to how easy of getting started, winner was stocks. Capital gains, winner was property. Influence, winner property. Passive income, winner was property. How much time involved was stocks. And retirement income was stocks. So, ladies and gentlemen, we have a tie, which means we are going to need a final round. Now, one of the biggest benefits of property, which you cannot do with stocks, is the ability to refinance, or also called remortgage. It's a very powerful strategy, and this is how it works. So we had our property of $250,000. It was growing at 5%, but then after 5 years, when it's worth $319,000, we could actually do a refinance and pull out $65,000 tax-free from the property. We could then use this money to buy a second property of approximately the same value. Then this one, also growing at 5% for the remaining of the 25 years, gives us another $1 million of total value. So if we add these together, this is the true final picture. With stocks, we had the value of $872,000 with an income of $2,908. And now, with property, we have a value of over $2 million and an income of over $4,000. So this means the final winner goes to property. So there you are, guys. In the end, property did crush the ROI, return on investment, of stocks. And this was mainly due to the ability to refinance and use leverage. Now, I know there's probably lots of ifs and buts, but even to be able to make a video like this, we have to use something to compare. So my key takeaways from this experiment were as follows. From a pure return on investment point of view, I think property is clearly the better investment. However, that does come at a cost. And here's the thing, I actually don't see property as an investment. Sound crazy? Let me explain. I actually see property as a business. Now, if you either have customers or clients, then you actually have a business. And with property, your customers are your tenants. And a business is one of the best return on investment activities you can do. But this does come with a big but. Businesses take way more of your time. I could teach someone everything they need to know about how to invest in the stock market through an index fund in about 1 hour. With property, the reality is that it would likely take hundreds of hours, and it would take a lot more money to get started too. And I personally like the strategy of investing in stocks while also building a business. This way you get best of both, and it would likely have changed these results too. So there you are, guys. Hope you found this useful. In fact, just one favor to ask. If you did find anything useful in the video, be sure to drop a like, as that's always very much appreciated. If you haven't yet subscribed to the channel, I invite you to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.